Will a share of Tesla stock truly reach $15,000? Today, this amount might seem like a big ask considering the stock price of the EV firm, which is at $864.51. To find out more, keep watching and listening. Is the price of Tesla shares too high or too low? Both supporters and detractors of Tesla still have unanswered questions about this. The top EV company appears to have extraordinarily high valuations, but its price projections are also absurdly low. You will learn whether or not Tesla stock will eventually be valued at $15,000 per share in today's video. A group of engineers developed Tesla with the goal of demonstrating that driving an electric vehicle could be faster, more enjoyable, and need no compromises compared to a gasoline-powered vehicle. These days, Tesla produces endlessly scalable, sustainable energy generating and storage devices, in addition to all-electric cars. According to Tesla, it is imperative that the world transitions away from fossil fuels and toward a zero-emission future as soon as possible. The founder and CEO of ARK Invest, Catherine Wood, presented a fervent argument for Tesla shares to hit $15,000 in February 2020. She compared it to Amazon 20 years ago. Tesla is now nowhere near the staggering number, even after the shares split for 5-for-1, but it has had an incredible run, rising by over 425% year to date, and Wood's fund has done well with it. Prior to that year, Josh Brown of Ritz-Holtz Wealth Management, who had met Wood during a conference in New York City, remarked that he thought she was a serious, brave, and curious person. That didn't stop Brown, though, from criticizing Wood for leading ARK Invest in an absurd and trolling route with ARK's tweet, which he said was intended to hit value investors, skeptics of innovation, and other skeptics on the head. Estimates for 2022 show that ARK anticipates Tesla's gross margin to achieve 40%, double the 20.9% level recorded in Q4 2019. This is necessary for the company to reach $15,000. Wright's Law, which anticipates cost reductions as technology advances, serves as the foundation for the prognosis. Though the law might be valid, it doesn't account for a variety of unforeseen circumstances. Tesla will have to cut pricing as a result of more competition. Increasing competition might also compel Tesla to adopt a new strategy and begin investing in marketing. Additionally, it might compel the EV maker to create outlets in less lucrative locations and increase its post-purchase service spending. The margins will be reduced by all of this. Furthermore, Tesla doesn't function in a vacuum. It will soon have to match the gross margins of the entire auto industry. To be fair, ARK has also put forth an even more extreme scenario in which Tesla files for bankruptcy and the share price plummets to zero. Most likely, the result will fall somewhere in the middle of that projection. Naturally, that forecast was made in the first half of 2020, before the global COVID-19 epidemic struck, and that makes a difference. It goes without saying that the epidemic had a significant impact on the economies of all nations, which in turn had an impact on the stock market. But since then, ARK Invest and Cathie Wood have revised their Tesla value model. Elon Musk, the CEO of Tesla Incorporated, concurred with ARK's 2021 open-source Tesla model, which stated its projected value of $3,000 per share in 2025. If they do well, he suggested, a price tag of $3,000 per share is feasible. According to Musk, if the business does well, each share will be valued at $3,000, meaning that Tesla will be valued at over $3 trillion, making it the most valuable corporation in the world. She stated that there are a few important factors, one of which is the market share of EVs, which is in the low 20s globally, as she asserted, and she believes Tesla would be able to reach that when asked why she had set a $3,000 price target for Tesla by 2025. She continued by saying that the US currently has about a 60% share. According to Wood, Tesla will dominate the electric vehicle market going forward, particularly if it becomes the first company in the US to successfully launch an autonomous vehicle. She continues, "We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, We also believe that it could take 20 to 25% share of the total auto market in 5 years. That's by 2026. The Wood-led ARK Invest team modified their valuation model this year in response to significant revisions, which included estimations of capital efficiency, assumptions and inputs for autonomous ride-hailing, and an advance of the prediction to 2026 of 1 year. Based on their examination of consumers' perceived time value, Tesla has modified the model to reflect updated assumptions for the autonomous ride-hailing market at each price point and the likelihood that the company would solve for completely autonomous driving. More demand than initially predicted is anticipated for autonomous ride-hailing at higher pricing points. Nevertheless, the revised model indicates that ARK has established a $4,600 price objective for Tesla by 2026 and came to the conclusion that there is a 25% chance that the price of Tesla shares in 2026 would be $2,900 in a negative scenario and $5,800 in a bullish scenario. In what years do you think the stock price of Tesla will be? Post your ideas in the space provided for comments below. According to Cathie Wood's recent estimates, Tesla might be valued close to $5 trillion by 2026. Star investor fund Tesla is the major winner in ARK Investment Management's wager. It's no secret, though, that word of Wood selling some of her Tesla stocks went viral online amid the most recent decline in the company's stock price. News reports state that longtime Tesla bull Cathie Wood began to appear a little less optimistic. That didn't last long, though, as Cathie Wood made waves on the internet once more by heavily jumping back on the Tesla bandwagon. Two of her exchange-traded funds purchased Tesla's shares in spite of the decline. 1,893 shares were purchased by the ARK Autonomous Technology and Robotics ETF, while 1,107 shares were purchased by the ARK Next Generation Internet ETF. In response to severe losses in the severely damaged stock, ARK Investment Management has acquired an estimated $28 million worth of Tesla shares during a violent sell-off in technology peers. With Tesla's weight at the second biggest position in the portfolio at the time, Zoom surpassed Tesla to become ARK's largest investment. According to reports, Cathie Wood is buying Tesla stock at an exponential rate as the price drops. When the value of Tesla's stock increased, ARK Invest sold 8,100 shares, or over 0.5% of its total holdings, for an estimated $5.76 million. As a result, Wood continues to closely monitor Tesla as one of his innovation-focused ETFs. Wood claims that Tesla is 3 to 4 years ahead of Lucid and Rivian in the battery market. American electric vehicle manufacturer Lucid Group Incorporated and automotive technology business Rivian Automotive Incorporated are both based in the United States. According to Wood, Tesla is actually ahead of nearly everyone else. She claimed that this is because Tesla developed extremely innovative battery technology, particularly after experimenting with Ultracapac and adding silicon to anodes. Hiders. Wood thinks Tesla is 3 to 4 years ahead of the competition because of these factors. Morgan Stanley's global head of automobiles and shared mobility research, Adam Jonas, appears to concur with Wood, stating that the corporation emerged victorious in the competition for electric vehicles. He claimed that Tesla was leading the electric vehicle race as it currently exists. He wrote, "Consider the EV race as a marathon. At mile 21, Tesla is leading. The other competitors, who are at mile 2, are still tying the knot." In Wood's opinion, the true breakthrough came when Tesla decided to create its own AI chips. Designed by Tesla, the specifications were released in 2018. They have been gathering data for billions and billions of miles ever since, though in a technical sense, their robots have been gathering the data on their behalf. It is noteworthy that the accuracy of these forecasts and presumptions depends on the state of the economy, which in turn influences stock and market values. Those who are acquainted with the sector are aware that daily fluctuations in stock prices are caused by market factors. Market forces such as supply and demand affect share prices. A stock's price rises when there is a greater desire to purchase it than to sell it. However, Tesla's stock price also varies. Furthermore, those in the financial sector are well aware that price fluctuations in the stock market are just as severe as those in regular markets. These days, the price of oil and other basic commodities keeps rising at an exponential rate, and the price of stocks is starting to decline. To see more of this topic, go to Tesla stock.